All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Monday, June 21st. So I would say theme of the day for today, a polar opposite from from what we experienced at the end of last week. So I'll get to that. We'll go over as many concepts as possible today in about 20 minutes here, so I'll try to talk fast. Risk disclaimer is in front of you. Everything that we're going to be going through here is for information purposes only, not giving out any advice or recommendations. This video is for educational purposes only. If the screen is a little bit blurry, YouTube takes a little while to render their high definition video, so just give it a little bit of time and it'll be a lot more clear. So yeah, let's start where we kind of left off on Friday. Really ugly looking close. All around looked ugly. The breadth was all day on Friday was pretty horrific. I pointed that out on Friday a couple times, and but the one thing that I tried not to read into too much into the price action, which again to me is dominant. And that's the major thing that I look at. But it was quadruple witching on Friday. We had a lot of events last week, so it didn't surprise me that there was a hiccup. I was surprised how once we got through the FOMC, I was surprised at their reaction Friday morning. But again, it's one of those things with quadruple witching. There's so much volume being traded on those quadruple witching index days, and I always get the question, hey, well, what's is there a trade here? What should we do on quadruple witching, because there's so much volume that is traded, especially for the S&P and the Nasdaq rebalance. There's a lot of reshuffling going on, and my answer to that question is kind of just get out of the way, right? You could maybe try to find some day trades, on quadruple witching, but for the most part, just let the institutions do what they're doing. They're really reshuffling a lot of the components. These ETFs are so large nowadays that there's so many assets that are tracking S&P indices and Nasdaq indices, and you can kind of see. So this is one of those things. If you keep a journal or if you keep a notebook, write down. The next one will be in September. Maybe that's a day. You don't have to take off for the day, but if you didn't like what you saw on Friday, it doesn't move like that every time, and sometimes it's the markets rally. It really depends on there's usually what's called a funding trade that happens, which means that all the rebalances, the benchmarks rebalance back to the indices rebalance back to benchmark weight. And sometimes there's what's known as a funding trade, meaning there's more to sell or there's more to buy. So sometimes it could be more to buy. But if you don't like to really, be a part of that where it's just one day, the indexes don't rebalance. They didn't rebalance again today. Now the Russell does have an index rebalance on Friday, but nevertheless, they're one-day events. So let's get to today. So I wanted just to recap that from Friday and just to realize that you really can see a lot of I say it all the time. I say it every quarter that you can see a lot of volatility on quadruple witching. Well, you got it on Friday. So one of the things that we kind of took away from that was the sentiment really shifted, right? So, there was some damage that was done because of that poor breath on Friday. There was definitely some damage done, and depending on what index you looked at and depending on what sector that you looked at. But the one thing that was kind of comforting, and we went over this in the TTG macro video, was that the sentiment really got washed out. I think the CNN Fear and Greed Index was around a 30, right? So that was in fear. I also, a great follow on Twitter, which I mentioned multiple times in these videos, is Helene Meisler. She, I believe she was on vacation, but she did put out a poll, and it was very skewed. She always puts out, and I think I have this in here in my channel, right? So my CF commentary channel, right here it is, right? 58% of the people thought that the next 100 points would be down, right? So this is kind of what's useful in terms of sentiment that you can kind of use. Now, if the markets went down on Friday and that wasn't the case, that sentiment wasn't kind of washed out, then I would have said, uh-oh, we may have a steeper decline on our hands, right? And again, we're always putting together all the pieces of the puzzle, right? We're looking at certain things, and sometimes we're going to feel that, when you get something like this negative sentiment, sometimes it's a little bit of a bigger piece of a puzzle. When it says the same thing every week, in terms of sentiment, then it's not as noteworthy. But when something like this really flips, keep in mind, I participate in this poll every weekend. She puts it out on Saturday morning. And the last couple of weeks were flipped the other way. There was, 58. I don't have the exact number, but it was high 50s, I believe, for the last 2 weeks that people thought that the market was going to go up. So again, it's just one of those things. It doesn't. So it's a great contrarian signal. Now again, nothing is 100%. So you have to kind of take all these things and put them in your own, but knowing that Friday was a one-day event, quadruple witching, sentiment was washed out, I was somewhat positive coming into this week. Sometimes I really clean out of positions when we break the 50-day moving average in the S&P, but I just thought it was a little bit of an overreaction. Now, I didn't expect that we were going to get this much of a bounce, and look at where we are. We're basically back to where we were in the middle of last week. So before I go to the 1 hour chart, which I always get some nice short-term signals off of, but you can see we're back above value, right? So we could turn on, I'll turn on labels here in our MarketWebs indicator, so that you could have some levels to trade against. But MarketWebs have been phenomenal, in terms of support and resistance levels. But we're back above value, so no harm, no foul. I mean, isn't that crazy in terms of the the Friday's price action and today's price action. So again, the level to watch now is 42.08, right? And the other thing that I noticed in the overnight session was that we came pretty close to the bottom of value. So really big range the last couple days. Also, we got into value. So this was one of the things that I said pre-market. I did send out, by the way, if you're not a member of Tribeca Trade Group, I sent out the audio recording, and the screen share of what we do pre-market every day, right around 9:05, or I usually start a couple of minutes late. But, I gave my reasons for why I thought things weren't as bad. And this is and then I kind of laid this out. I said a couple things that I'm looking at, that to see if we get back above this 1 hour VPOC 41.58, right, which is right here, and we did that, and we stayed above, and we actually got above and into that. Now this is where I was a little surprised. I thought we would kind of stop here for the day, to be honest. I thought that was a good enough bounce, but we actually got inside value, so that's even better. So notice where we stopped, right? This was going back to Fed Day last week, right? And the day after Fed, I think the afternoon Fed, we kind of came into here, and then the following day. So we did run into some resistance, right? We could not get into value, right? And I put that on Twitter last week. I said, hey, we're struggling. We bounced after the Fed meeting on Wednesday, but we ran right into a little bit of that short-term resistance, and clearly, this got rejected, right? We started headed down. So we're basically right back into the good old range. So, a couple other things that I thought were telling for the day, and then I'll kind of give you some more of my observations. But bonds, right? Bonds, it's kind of tough because there's a lot of things that go on in bonds, right? So for example, just to kind of recap what we've seen here in bonds over the last couple months. But, remember when bonds go down, there's an inverse relationship. So that means yields are going higher, right? So since that happened, right, when yields went higher, there was an exodus out of high growth stocks and a move more into value. And then for the last few months, we've been going sideways. Now, we kind of want to see bonds grind higher, but when they move up very quickly, like they did towards the end of the week, they could also mean they could take on another kind of a little bit of a different animal. When bonds are going up a lot, sometimes that means it's a flight to safety, right? People don't want to be in equities. They're rushing into the safety of bonds. That's what that kind of felt like last week, Thursday and Friday of last week, right? And then of course, there's a lot of models that are tied to this stuff, and we saw a little bit of a move back into growth. But what was particularly nice, and I think today, is like I don't think we wanted to see bonds just like going down fast. We don't want to see them go up fast either, in my opinion. It just means that there's too many things wrong in the system. So to see this morning kind of develop where, the market was kind of spooked a little bit Friday after the close and in the overnight session too. So bonds went higher, and then they started to kind of really, right around, 3, 4 o'clock, I think, when Europe opened, they started to come in, and yields went higher a little bit. So overall, like, to me, I don't want to say panic because that's not the right word to use, but a little bit of like that panic buying in bonds. You could see that really came off today. So, and that meant some other things could possibly rally. And that's when I saw that, I said, hey, why don't we start looking at, because I wasn't really sure coming into today what we were going to see. That was another note that I put on Twitter, is that nobody really knows what we're going to see on a day-to-day basis, regardless of how confident they seem on Twitter. Nobody has a crystal ball. So one of the things that I was interested in was whether or not growth was going to continue to advance like it did last week, or if some of those areas that got kind of taken to the woodshed last week, if some of those areas were actually going to see a bounce. And that's kind of where I focused some of my early trading on the day. Once I saw bonds move like that, there's such a move with banks. I went into a little bit of JP Morgan this morning pre-market, but you could see it ran into resistance. So I dumped that trade. I was also in a little bit of Caterpillar. There were some Caterpillar calls right after the open today. I tried that for a little bit, made a little bit of money, but I was wearing some things like, I had a little bit of SHW that I mentioned in the room that I was picking on some calls. That was up about 2% for the day. So we got some bounces in some things, right? Now, some of which I still think it's going to be, just like we saw back months ago when all the growth names went down, right? Well, we haven't seen all the growth names return. We've seen some names outperform others, and other names are still, haven't really fully or even halfway recovered, right? What happens is the leaders begin to emerge. That's kind of the same thing on a lesser extent with what you're going to see in some of the financials, the home builders, the industrials, the material names, right? They all got hit last week. Well, some of which are going to get bought, some of which are not, right? So that's kind of the things, and that's kind of what makes what we do a little bit exciting and fun, is that, you're going to find these leaders, the more that you do your homework, you're going to find the ones that come back rather quickly versus the ones that are going to stay down and won't get bought. All right, so that's a couple things that I observed, and I think it'll be fun to see which ones are the ones that that come back. Like, I have alerts, like I'm watching Deere. Remember, Deere had great earnings. They just went up too far, in my opinion. Right? I mean, we've talked about Deere now a couple times over the last few weeks, but yeah, my only issue is there's this 314 VPOC that is still lingering down here, but I'm watching to see if the further price gets away from that VPOC, virgin point of control, the better. I would watch for, to see if this thing can get outside of value, 340, right? That would be something to watch, right? So, and same thing with things like Caterpillar and so forth. Home Depot, Home Depot did get above value, up about 1.6, so a little bounce there today in Home Depot. But, again, you look at the daily charts, and these things, have gotten, again, probably went up too far, like a lumber chart, and you kind of go from there. So we'll see, I think this thing doesn't go straight back up, but we'll see. It'll be monitoring of some things. All right, and then there's some other things too. Costco is around the top of my list. It's not an expensive option. It's just it's really it doesn't have three moving averages around it. So the definition of coiled is three moving averages, but it does have two. So it's on the cusp of a breakout. Now it's not there yet, but it's pretty damn near close. Right? I like this price action in Costco. What else? Let me talk a little bit about before. I know I'm already looking at some individual names, but let me talk a little bit about the VIX too. One of the things that I said in Friday's video was that the VIX obviously popped pretty decently on Friday, but one of the observations that I made was that, well, we're not over any of these recent bouts of volatility, right? Here we hit a 40. Remember, obviously we had this crazy move, during the pandemic a long time ago now at this point. And then the next move up was only up to 44. Still a big level, but way lower than where it was. The next move up was 35. Now this one was a little bit of a head fake back in November. That was the election, so that made sense, right? Got back up to a 40. But notice every subsequent move has been lower. Now eventually this will change. We'll eventually get more volatility at some point. But right now, 40, 37, right around 32, 28. So we continue to make lower highs in the VIX every time we have one of these episodes. So I don't know if this is fully over, but I would, I think I don't want to say anything, 100%, but obviously this looks like it was the episode of volatility for this little episode is over with. All right, so and then we'll kind of see. Maybe this settles in and goes back higher. I don't know, but we do know that the summer is a more volatile time frame, and I think going forward. So by the way, so this is a very good thing. The other thing too, which I'm not going to bring up here, with credit spreads, there was no widening of credit spreads last week either, right? And that was something that we went over in the weekend video too. We just did not see besides the crazy price action that happened at the end of the week last week, we didn't see a lot of warning signals, right? Breadth did decline, but that's, we knew that happened. But, there's a couple negatives out there and there's a couple positives out there. But overall, like if I saw something like credit spreads really widen, that wowould get me more concerned, right? But here's where it comes down to, right? All these things that we're talking about, right? I put some observations in here, right? Because really, this is a tough market to trade, and it's been a tough market to trade for the past few months, right? There's been these heavy rotations that if you're not quick, you can get caught, and it happens. I got caught in some trades last week. It's not fun. So the market's moving, when the market's moving this fast, you got to try to slow things down. And how do you slow things down? Well, by lowering your trade size, your amount of positions, and then you can be much more relaxed. There was this great video this weekend. I think I have it here. With Steve Cohen. Steve Cohen does not give a lot of interviews. I talked about this in the macro video this weekend too for members. But it's a 43-minute long video. Really, I mean, there's probably about 10 different takeaways that you can get from this short video, 43 minutes, about how he's traded over the years and some of the things that he said about, the interviewer was exceptional in this too, asking about slumps, market slumps and so forth. And, in terms of like your own personal trading slump, and about maintaining confidence and things like that. So there's a lot of things to really take from that because, we're human, right? And with the market, the difficulty, I think, much higher than last year, you have to do things to kind of keep yourself so that you don't get as burnt out with this type of market. and kind of stay fresh, right? And it happens. I went through and I talked about that a lot in in the macro video about it, how it kind of happened to me. I was half on vacation last week, and perhaps I should have just taken the whole week off, and because I was kind of forcing some trades. So those are the bad habits that can make this type of stuff worse. Right. And again, I try to focus a little bit on this investor psychology and what we're dealing with on a day-to-day basis. Because I tell you, again, it's not easy, right? And every time we have a red candle, everybody starts calling for a market crash. It's not easy to kind of put the mute button on a lot of these people who, we have one or two, just a couple down days, and everybody's, there's people over the weekend talking about the market's going to crash, and so there's a lot of distractions out there that can really kind of mess with your head a little bit. All right, so I wanted to mention that. The video is already 20 minutes long, but a couple other takeaways, right? I was really surprised with the, like I said, I thought we're going to see some different areas outperform. One thing where people really wanted to be in today, the energy stocks. This was not like top of my list in terms of buying the dip in energy names, but if you look through these charts, there was a lot of option activity. There was a couple things like there was a FANG order, not the Microsoft Amazon, that FANG, but the actual FANG stock, right? So these things, some of them got hit, some of them did not. I got caught in a trade last week. Of course, the thing rallied back here a little bit, and that's what happened to me a few times last week. Is I just pulled the trigger on stops, maybe a little bit too early. Maybe my position size was a little bit too large. So one of the things, and again, I'm repeating myself, but sometimes you need that to happen to you a couple times for you to get right back on track. And it's happened to me a couple times this year where I've had a week where I've made a mistake here and there, and it gets me right back on track for what I need to do, right? So, that happened to me with a couple. I won't go into more names, but I'll leave it there. Is that you do make mistakes from time to time. All right, regardless of sometimes you've been doing this for a long time, like me. The banks were all. I mentioned the banks already, but yeah, energy was the strongest rallier. There was some growth names, like even though it wasn't really a growth day, the Qs were up on the day, but they weren't the outperformer. But I think that's fine, right? Considering that they were so strong, the Qs were so strong last week in a tough week that they hung in there pretty well, even though it was more of a value type day, cyclical type day. Right? Value names were up 1.9% today, so they were the outperformer. All right, and a couple other areas that, the industrials came back some today, some of the home builders. You kind of go through. I like this builder chart. This was something that was brought to my attention in the trading room. I'm still watching Pulte, which saw some option accumulation last week. When we get to some of the software names that did okay, there was a pretty decent size calls that went up in this. I like to call it Snowbird, like the skiing place in Utah. But look at this order in snow. This hit late day, 15 minutes before the close today. This is a name that I've been talking about, how it's kind of changed personalities. For a good, since February, this thing was below value. Was below all the major moving averages, but is now kind of reemerged. So it has me interested. We talked about a call spread that you could play in Snowflake today. But look at that size trade for in September, right? Somebody apparently likes it. $1.9 million trade that went up right at the end of the day. All right, so I mentioned a couple names for you. Let me go through a couple other charts, so I'm not just talking about the trade management stuff. But Twitter, again, Twitter's kind of tough because I use Twitter a lot. I get frustrated with it for multiple reasons, but it's starting to kind of continue to fill this earnings gap. Right, nice candle today. We've talked about how we've seen a lot of call positioning. I'm targeting about 63 for first target, out of this range in Twitter. A couple other names that I noticed that added well. This was a name that I put on last week. I added to it today. This is one of the private equity firms, KKR. We know Blackstone, as I put this in the TTG Trend Portfolio weeks ago. Someone told me on Twitter, it's so funny, like all the way back here. They're like, yeah, that's it. Yeah, sell it. Okay. That's up to $99 now, but that's okay. 98, $99. So anyway, so this KKR looks like a fresh break. I like when the moving averages catch up with the price and then price breaks value to the upside. What else? You also did very well today from what I gather here. Again, similar looking charts. Both spent a lot of time underneath the 50-day moving average, only to recently retake it. Right, so this had a nice day today where software wasn't very strong. Another name that's on my radar for tomorrow is not Farfetch, FTCH. Stitch Fix. Right, remember Stitch Fix rallied on earnings. Right, well this thing kind of it filled the earnings gap. Right, so names that have had good earnings, have come back pretty nicely. Right, it's a great way to kind of reposition in a name, and we certainly have seen that in some names that had good earnings but not a great earnings reaction. Right, MDB was one of those names. Docu actually just inside day, by the way, for Docu. After a monster move after earnings. All right, guys, and what else? Oh, the last one we'll talk about here is we'll talk a little bit about biotech. Biotech is close. Again, it's still it's going sideways, so you have to have a little bit of patience with it. I had tried a biotech trade about a week ago, and I bailed on it after taking one target. But it looks decent. I like this name. This is a name that I put on today. We had this in the weekend watch list trade. CRISPR. The reason why I like this is because it's been basing now for a while, but I like the weekly chart. Right, it's starting to come around. I've been watching this name for a couple weeks now. Also above value here. Could set first target to 132.80. MA is a name to watch too. This was a name that I put on some calls late last week. So why did I take these calls off? Right. Well, number one, it stopped at the top of value. Number two, right. So great example. Setting your target to a virgin point of control, an area where there's been a lot of buyers and sellers that have previously met up but hasn't been revisited. Took out this VPOC. That's exactly where I took my trade off. And now I'll watch. Right, I have an alert back here because I like the daily chart. It just has to trigger. Right, sideways action. And we'll see if this thing can get back out and up. But it's not there yet. It's got to break 374, and even my alert's up at 376 for this thing. The last group we'll talk about, and I'll try to get this video done in just about a minute here, but medical devices, right? Medical devices look great. If you go through some of these charts, as we did in the weekend watch list video, I pointed out 3 or 4 different names. I won't do that here, but just to point out the strength here in the medical device ETF. Again, looks pretty good to me. All right, guys, thanks for watching the video. Have a great night. And if you're not a member of Tribeca Trade Group, if you like that morning note, and if you like to go over charts in the morning, that's basically what we do every morning at a little bit after 9 o'clock, as well as I give you my market thoughts and a little bit of strategy for the day. Right, so you can click right on my Twitter profile and access it there to become a member of TTG. All right, guys, thanks for watching. Have a great night. See you tomorrow.